for more is Cristina Ulang, the research head at First Metro Investment Corporation. So good to have you back on. Chris, welcome to the program.
Hi, good morning, Kathy. Nice to be here.
Yeah, and at a very critical time, how much of all this weakness in the capital markets is self-inflicted?
We are in a seasonally weak period. This is August. It's ghost month. And then on top of that, we have the MSCI rebalancing where we witness an outflow because we didn't get a country upweight. And so I think this is really very negative on sentiment, and people are a bit cautious and not entering the market in a big way. But I think this is really seasonal, and I think we will come to the point where value investors are going to come in realizing that there's really nothing wrong about Philippine fundamentals. We are growing. GDP is 5.5%, a bit accelerating from first quarter, 5.4. Our peso is not responding anymore in a big way to the yield differential. The peso is stable so far. It's not coming back to weakening to as high as like 59, 60. We don't have that scenario. Actually, inflation is moving lower, and for the month of August, it's going to be like maybe 1% or a bit lower than that. And the BSP policy continues to be very supportive of the growth outlook for next year.
But Chris,
I think
are
all
the
of these
fundamentals
are not
really
in the
intact? I
price.
mean, we've heard from the finance secretary himself saying that it's losses north of 118 billion pesos to the economy since 2023 because of the flood control project's anomalies. And when you take a look at the markets, there are market watchers out there saying that a big part of it is because of the investigations going on now.
I think if you're going to look at the quantity, if you're going to look at Philippine exports to the US and the impact of US tariffs on Philippine exports, that's about 16 billion worth of Philippine exports to the US, maybe 13 billion worth of exports to the US, and that's going to be slapped by this tariff of like 19%. I think that is an even bigger issue because the impact in relation to GDP, that's about 3% of GDP. When we compare it to this the leakage coming from this flood control, it's not even 1% of GDP. So I think the improvements that are going to be introduced in the government procurement of infrastructure, which includes this one, would be good. Going forward, it's going to improve governance in as far as government procurement. I think we are just at a low point and sentiment is so weak. And we are going to transition into better government procurement standards, accountability, transparency, and efficiency, where there will be more productivity and greater targeted allocation, those that are projects that are going to be more impactful, and of course, greater transparency. So I think
but
we're
as
going
you
to
say, sentiment is weak, and it's apparent out there. It's 4 straight days of a decline, and the peso is also weakening. What sort of an impact is it having in that 1%? You made a mention of 1% of GDP, not very much, but there is that impact. In the equities markets, how are maybe the infrastructures looking? Where is that weakness emanating from?
We are a small market, and every time there are outflows, foreign outflows, reduced foreign participation, the market has been very sensitive because we are very, very small. In the emerging market universe, the local bourse is very sensitive to flows. That's why we need to build up our capital markets. And it's really good to know that we are in a transition, like we have the CEMEPA, Capital Markets Efficiency Promotion Act. And then I think the management of the PSE is going to come up with a revised, improved rules on the REIT, which is going to improve the REIT space, those are qualified to be listing as REITs. So I think I'm looking at the positive things. I think the capital markets is going to transition from where we are to an even bigger one. But that's not going to happen overnight. And then government procurement also is going to be like improving also. So all of these are not in the price. The market is a very low point. And I think it's time for value investors to begin revisiting the valuation.
There is value, but make us understand first where this weakness is coming from. Is it in infra stocks or is it in the conglos that have infra embedded in them?
Apparently, this is coming from the large stocks because these are the ones being held by the foreign investors, the global passive funds, the global active funds. And when there are movements in the flows, then the large caps are the ones being affected.
Well, it's a small market, as you say. It gives a lot less confidence or, I guess, reason for funds to come in here. But what is a compelling reason to come in here? It's a small market. It gets impacted by a small kind of development, which you characterize what's going on in the anomalies in the flood control projects.
Yeah. So as an investor, I think what investors should be looking at would be the mismatch in as far as the fundamental value of the market and what all of this negative sentiment is doing to the current valuation. So we are now at 9 times PE. It's the cheapest in Asia. But look at our return on equity. Company return on equity is average like 14% on Philippine companies. Our dividend yield is for the 30 company PSA is middle of the pack, 3.3%. Not so bad. And what is not in the price right now, and which is really the source of the mismatch between the fundamental value and the real value of the market, is the growth prospects for next year. Next year, we're seeing like accelerating growth. And that's going to be supported by policy rate cuts. So it's not yet in the price now. So I tend to look at the mismatch between the prospective scenario next year, fundamental, which is very positive compared to where we are now. So that gives the potential for price appreciation.
Right.
So I think
that
the market is not.
Is, to the understanding of many, the reason for maybe the lack of confidence, transparency, or the lack thereof, the lack of governance. What is this costing the Philippines in terms of capital? Could there be a potential capital flight if this were to go on for a longer period of time?
I don't think this is going to lead to capital flight. I think the what is important is really the foreign direct investments, those that are here for the long term. And I think that is based on the fact that we are very supportive of an open economy. We don't have these shifting changes in policies like Trump. That's why you're seeing asset rotation in the U.S., trade diversification in the U.S. But here in the Philippines, we have a stable government, we have a stable regulatory regime. It's just that there are these investigations ongoing. But I think the silver lining is that the government procurement is going to be improving. Next year, given the loopholes that we are now, the lessons that we are learning, I think this is going to elevate the standards of government procurement in terms of the infrastructure. And I think that's the good thing. It's the transition phase. We
All
are
right.
in that period, and there are pains, birth pains, for us to improve. It's, I think, by baptism by fire.
Okay, well, it's good to see beyond the clouds. Thank you so much for your insights, Cristina Ulang of First Metro Investment Corporation.